Okay, we have three wonderful panelists today that actually volunteered their time. This is really funny. Okay. Got them for me? Okay, great. Thank you very much. Okay, so now we're ready. First, I'd like to introduce Laura Page. Laura is going to talk about some exciting things that hopefully are of interest and concerns to us. Then we have Anita McMurtrey, and she's ready for action. Robin, I'm not so sure about, okay? You were giggling. But you're ready, aren't you? This is good. Okay, all right. So we want to make this somewhat interactive. We've prepared some questions that we think are important to the group and their responses, but we also want audience participation. So if you've got questions or if you want to follow up with it, please get involved with this because it's about you. It's about helping each one of you this morning. So we've got about an hour to talk about these topics, and so we'll just go ahead and get started here. Why don't I go ahead with Laura? Okay. The first question is, door number one. Okay. How do you ensure the fees you are providing to lenders are accurate? And what has changed in the way you quote fees since October 3rd?
All right. Everybody hear me? So the way we've quoted fees has changed since October 3rd in several different ways. First and foremost, most of our fees now have to be quoted separately per line item, where in the past we've done aggregates or bundled our fees. But probably the biggest hurdle that comes along with that is having exact fees very early in the transaction. And what we find is that our lenders are not giving us enough information to accurately quote those fees. We don't know what endorsements they're going to need. We don't know what documents are going to be recorded. So for us, we've taken the tactic that we're going to assume worst case scenario and quote as many of the things that we can think they'll possibly need and then scale it back as we get closer to closing and get that information. But I think the key really is communicating with them as much as possible and explaining what you need. The other part of that question in what's changed and what's been maybe a hurdle for us is that a lot of these lenders are using platforms where they are asking for fees from us through a certain operating system. And some of those systems even ask for them on headlines. So it's really hard for us to accurately quote it. Okay. Finish the question.
Great. Okay. Well, thank you very much. Any other comments from the audience about that or questions that you'd like to ask Laura about? Okay. All right. Well, let's go on to the next one. Anita, I've got one for you. There are a lot of inconsistencies in with the various lenders and their processes. How are you dealing with these individual circumstances and responding?
Well, as you can probably all attest, as a company, we're seeing a broad variety of inconsistencies and instructions coming from the lender. One of the inconsistencies that we're dealing with is the loan operating systems that the lenders are using. Can you all hear me in the back? No. Now, how about now?
Yeah.
Okay. So with those loan operating systems, do you recall when we first got prepared for TRID? And of course, we all had to sign up and be prepared to be online for Encompass, Simplifile, all of these many different platforms out there that we had to be familiar with as escrow. And then in addition to that, we have Closing Insight out there, where the platform is the lender uploads the information into the platform. And at that point in time, of course, we're supposed to be able to either input the information onto the platform site through Closing Insight, and or if you have a system that will actually push and pull the information back and forth, then of course you're supposed to be communicating with the lenders out there. The problem is we get all prepared for that, and now all of a sudden the systems that the lender said that they were going to use is not working for them. So now it's confusing to us at times because now we're dealing with the lenders out there that either they just placed the order with us on the platform system, and so we have to continually monitor that and or they're working through closing insight, and then we're supposed to be able to collaborate with the lender and input in that information. So we have a twofold problem here is because the lender will be emailing us and saying, oh, by the way, we just sent you an order. How come you haven't opened it up and given us a confirmation back? So we are continually watching those orders to make sure that we get them placed in our system. So from our perspective here, in our company, we have a systems administrator watching those orders for us all the time so that we can be proactive and set those orders up timely, and then that we can respond back timely when the lender needs figures input onto their HUD. I wanted to share something with you. I read through the National Mortgage News, it was 2 days ago. So there were 548 banks that were surveyed out there. And the article said that most of the banks were having trouble with the CDs because their vendors are still updating their loan originating systems. So this forces the lenders to make a manual workaround. Thus, they're struggling to comply with, partly because their systems are not complete. So we're seeing a result of that. Because when we're receiving the information from the lender, sometimes some of our lenders are manually finding workarounds to input that information onto the CD form, but our problem is we all have been prepared. Our systems work in order to, the information input in carries over to our settlement statement. So we're trying to manipulate their figures into our systems, which causes us some issues out there. One more quick item is we're often seeing, as you can all attest here, is the issues with the fee quotes. We send them our title premium fees out there. We think that we've already communicated with the lenders, letting them know what fees need to be input in, and then we receive the CD over, and of course what they're showing is the actual fees. So from our perspective, we communicate with the lender one more time, letting them know, because we've already given them our fee quote. Make sure that your fee quotes are accurate when we provide them that information. So we're giving the information to them. They still don't quite understand, some of our lenders anyway, how to quote those fees. So from our perspective out there, we are having to quote, or we are requiring from our company that we quote the correct title premium fees on the CD. And then, so if the lender is insisting that they use their own fee quotes, I'm insisting from the compliance side that we continue to quote the title premiums the way that the CFPB has required. One thing you ought to think about, and one thing that we're doing, is the CFPB regulations. How many of you have those on your website or on your laptop? I keep them right there on my desktop so that if the lender calls and they're concerned about certain items, whether or not they should be, how they should show their fees, what loans they should be processing through, we send them a copy of our e-regulations. And I can tell you that that has been I think a lifesaver in a lot of our areas. I can tell you if they're having questions on our lender fees, how CFPB wants you to quote them, I have them all bookmarked, and we send those specific fees directly, or the specific regulations, to the lender and try and work through it. We've had meetings. We have a lot of conferences with specific lenders, and I can tell you sometimes when you meet with your lenders and they're one of our big customers, it's kind of scary to go up against them at times and talk to them, because I still want to retain their business. So it's a fine line to make sure that the information we're sending them, that they understand how to quote your fees out there. The other things is there are 4 key points that I try to drive home to escrow. Is constant communication with the lender. continue to educate them, not only the lenders, but to keep yourself keep yourself educated as well. Document your files. Make sure that you document whether or not you've sent the information to the lender, and then keep that information scanned into that specific file. And then the last thing is collaboration. Our loan operating systems make sure that we continue to collaborate and work with the lenders. That's it.
Anita, would you like to teach a workshop on that? She's got this down. I like it. And especially what I like is the CFPB regulations. She's got them all marked and everything like that. Who would like to get a hold of that copy? Yeah, I would too. Okay, all right, let's move on. And our next question is for Robin. Thank you so much. And Robin, on the ILTA tidbits, we're always hearing that the preparation under TRID was supposed to be shorter. So a couple questions are, one, is it? And then do you feel that in 12 months that we'll be at the same level before TRID, or shorter or longer? What are your thoughts about that? That's a good answer. I like that. See, she knows it.
First, as part of the interactive part of all of this, I have a question for you. Anita had mentioned really seeing some of those platforms and things. I know we're receiving orders that way that we're getting. We're also getting them direct from the lender. Is anybody out there actually been inputting figures into one of those platforms to actually collaborate with the lender? Encompass? Well, Encompass is, yeah, because that goes direct to most of the LOS softwares. Is anybody else excited?
I agree.
Just Encompass? Because with Really See, I know that we're not even, there's not a lot of interaction that way, but I keep getting a bill for every single file that gets opened on that platform.
Can I just elaborate on that really quick? In regard to our loan operating system, with the platform that we're on, and I think eventually probably all of the title companies with your processing system will be able to see that collaboration between the lenders. With USAA and Wells Fargo, Bank of America, we're actually seeing where the orders are placed and uploaded into our system. With that then, it's the order is there, we input in, they send us the information, the contract is actually within our doc repository, all of that comes in, and then they actually place the figures into our system, we confirm, and then push and pull back and forth.
Yep. And I agree, as we all get to that integration point, we'll be at that point. I'm trying to refer to those third-party platforms that I know we're all paying access fees to get into that don't seem to be used at this point in time. So I'm hoping that lenders either get on board with fully using that or not. Okay, so now the real question.
Sorry.
On the timing, you know, we went into this thinking wholeheartedly that, wow, we were going to have a loan package in our hand at least 3 days prior to closing. Yeah, right? I went all across the state teaching Realtor CE classes saying just that, like, no worries, folks. We're going to have numbers. We're all going to get a chance to look at it. I'm going to sign to the seller. It'll be gravy. And that's, of course, not what we're seeing. We're seeing a request for figures to finish out the CD at 4:30 on Monday afternoon because they got to get it out Monday because we're going to sign on Friday. And 10 minutes before the closing, we're actually getting loan documents on Friday. So that reality hasn't really helped too much. What I think is a little bit better from our perspective is from a processing side, we have taken the approach that we're no longer processing a file by the closing date. You know, back in the day, you got the order, you waited till like a week before closing to order payoffs and all that. We've kind of had to shift our momentum and completely process that file up front, as I'm sure all you guys are, because some of these lenders need those figures and fees 10 days in advance so that we can comply with that. So that has helped us get some of that pressure off of us from that perspective. If we're preparing the closing disclosure, though, we're still having that push time when they're trying to deliver it. Then we get the lenders that want to send us the closing disclosure and want us to prepare ours to copy it, but they're going to provide it. I'm like, why do I need to fill in all of page 4 and 5 if you're providing the darn thing? But they won't go past that unless I provide them one that's on it. And I tell them, folks, just copy it. If we're not prepared to just copy what they have in there, we're still accountable for our numbers and our figures and our title clearance issues. And as long as we're in compliance with that, I don't really care what else they have on that document so much because it's not my issue, okay? We're using a settlement statement to close off of and to go through for our figures and everything because I've got no say in what's on that closing disclosure. Timing-wise nationally, reports are running that they're 3 and 4 day closings are taking 3 to 4 days longer. What I hear from a lot of appraisers or from lenders in the area is a lot of their holdup is on appraisal issues. We just had one Friday that they were writing up an extension on because they couldn't get the appraisal and updates to the appraisal in time. So there's a whole lot of other things that are going on with the letter with requirements that they've got to beat besides just this document. This document isn't necessarily that holdup issue. It's all those other compliance things that have gotten in their way that they're, you know, at the last minute trying to get that. So 12 months from now, oh.
Okay, just don't share that with the realtors though and everything right now, but yeah, thank you so much for sharing your comments on that. Okay, our next question is one for the group. So let's just throw out a group question for the three of you, and it's got a couple parts to it, but I'll just go through it here. What are the most important questions I should ask lenders? Who prepares the CD? Who delivers a CD? Timing questions, you know. When?
You don't know.
What's that?
You got the wrong one.
I got the wrong one?
Yeah,
Oh.
you have to have here. Can I use your highlighter?
I got the wrong one. That's the question? Okay, got it. Okay, now you won't be confused. Okay, got it.
Now
Thank
they're
you so
what-
much.
Now they're what you planned on. Oh, sorry.
Okay, all right, now we're back at the ranch here. Okay, group question. Are we ready now? All right, I'm finally ready too. Okay, what are the most important questions I should ask lenders as a group?
Start? Well, I think what we're finding is there are not enough questions we can ask our lenders right now. We feel most of the time that we're not really in the loop on what their process is, so I think right from the start, the earlier the better that you can find out what their plan is. Are they planning to prepare the CD, which in almost every case they are in our experience.
You pull that in closer.
And the other thing is to ask if they're going to deliver the CD, which in our case, again, they are every single time so far. But the other thing that we're really running into is a little bit closer to closing. We're finding that a lot of times lenders are actually disclosing a CD to a borrower, and they have not even requested fees from us, or they may not have told us they've disclosed to the borrower. And so if you're not asking those questions up front on their timing and what they're doing, what happens is all of a sudden you get a phone call that we want to sign and fund and here are your documents, and you have no idea that they even sent out a CD. And that leads to all sorts of problems because we walk into a closing room with a closing statement that has all of our fees on it and a CD that does not have any of our fees correct on it. And so the closing statement may show that they need $2,000 more than the borrower was disclosed. So I definitely think as many questions as you can possibly ask along the way will be more prepared.
One thing that we focus a lot on is necessarily recording fee issue. That is one area that CFPB has fined a title company in overcharging on recording fees and not refunding within the 10-day requirement that they have. The reason I bring this into this questions for lenders things is I never ask any lenders, what are you going to do post-closing if we find out that we overcharged on the recording fee and now we need to adjust it? Because according to the rule, they have 30 days to provide a new closing disclosure, final closing disclosure to the borrower. So we find that we overcharge $3 for the recording fee because it's not a legal description. So we contact the lender, hey, I got $3 extra, we're going to revise our settlement statement, because that's what matters to me in my world. And they're like, oh, I don't care, but don't put it on the closing disclosure, we're not doing anything with it. Wow, okay, you're going to, because somebody's going to get nailed for that down the road. So one of the questions that I think that we need to be asking, besides all that delivery process, is post-closing, how are you going to handle any of those kind of changes? We're documenting our files for the responses that we're getting, because I know that lenders are going to get bid on that further down the road, because it's very direct in the rule that they need to be addressing that.
Okay, in addition to that, I think from the settlement agent side, If we could get the lenders, when we ask, once they've given us the figures, would you balance with us? That would be most awesome. Because all of a sudden, like everyone's mentioned here, the borrower has already received the CD. Oftentimes, we haven't even seen the figures on the settlement agent side. In addition, if you do have the figures out there, oftentimes we're asking the lenders, can we balance? Will you balance with us? And they'll say, no, we'll balance with you after we receive our loan documents back. So that's a challenge as well. If we could work with the lenders, and if they will provide us upfront before closing figures to balance with, that would certainly shorten the delay in getting funds to us so we could go ahead and record timely and have our figures correct.
Okay, all right, thank you. All right, let's continue with another group question. What should I be talking about with real estate agents?
I'll take it.
Okay.
Our world has changed. We're used to being in charge of the HUD settlement statement. Realtors are used to directing the transaction, when the closing's going to happen, who's looking over the numbers and all those sorts of things. They're not in that driver's seat anymore. And it's very difficult, I know it was very difficult for us to kind of give up control of that HUD, the CD now, and I know that they're struggling with that as well. So I think a lot of patience and a lot of talking through them, we have to find other ways to help our realtors feel a really important integral part. And maybe that is saying, hey, I'm not going to send you the closing disclosure, but I'm going to get that settlement statement to you and go through that. And I can't schedule that appointment until I know the lender has provided the closing disclosure, because we don't want to be bouncing that around. And it's that proactiveness, but we have to be really conscious of the fact that they're having to let go of some of that direction that they've had. It's a mindset change for all.
Besides letting the realtors know that they no longer get a copy of what they would consider the HUD, and now it's the CD, and making sure that we communicate with them up front that the CD, they will not be receiving the CD, and secondly, that they're only going to be receiving the settlement statement, which really, truly makes more sense from the agent's perspective when they're reviewing those fees out there. But one thing is, we all went out, we all visited the agents and the builders and educated them as far as this is what's going to happen in our new TRID world. But don't forget your new agents out there. We have continually new agents coming aboard. That's one thing I think we have to be mindful of, is continue to find out who those new agents are and keep them abreast of our new TRID regulations as well, so they can find out what they need, how they need to write up their contracts, how they need to be working with the lenders, and what they need to be telling their sellers and borrowers.
I think you both touched on a lot of what I was going to say as well, but I think the other thing that I would add is, now that we do have a few months under our belt, we are starting to learn some of the trends of our more frequent lenders and loan officers, and so I think it has been helpful for us to reach out to the agents earlier in the transaction and kind of let them know a little bit of what to expect, because we've started to anticipate how that particular lender operates and timing, and they seem to really be responding well to that as well.
Sure, go right ahead, Laura.
Back to the interactive part of this. How many of you have conducted mock closings in groups or anything in real estate office to go over the closing disclosure with your realtors? Yeah, we don't want that to be, they're not getting it necessarily anymore. It is new. I think that's a really key opportunity for all of us to be out there in front of them, is to go through that document and understand what's on it, what it's going to look like. Because they're still going to be in the closing room whether they get that document or not. And the more that we can help them look informed in this process, well, the better we look then at the closing table too.
Great. Okay, Laura, a question for you. Are there issues explaining title premiums on the CD versus the settlement statement?
Yes.
Good answer. How many agree with that answer? Okay.
There are several issues that pop up in the difference. I think the most obvious one, the one that we've touched on several times, is the new way to disclose the title insurance for simultaneous issue. And that one is still a hurdle. I know the others have touched on it. We have a lot of lenders who have created forms that basically force us to quote the fees the old way. And so from a compliance standpoint, most of us are still quoting the fees correctly. But we have probably still a very large number, maybe even the majority of our closings where at the end of the day, the CD shows the title fees the old way instead of the new disclosed way. And so in those instances, it's more difficult because of the conversations we're having with the lender, but from the borrower standpoint, it looks the same, so it doesn't make it that hard to explain. But when it is different, when they do put the new fees correctly on the closing disclosure and we show them the old way on the closing statement, really what it's taken for us is just explaining that that closing disclosure is just that, it is a disclosure. And that we're using the settlement statement as the actual documentation of what fees are being charged throughout the closing. And really, for a borrower, they're not so concerned about that. They're mostly concerned about the bottom line, so we haven't had a lot of issues in that regard. I think probably our number one issue right now as it pertains to the difference between the closing statement and the closing disclosure is that we don't always know what the lender has disclosed, and they don't care if it matches our closing statement. So we spend a lot of time at the closing table with a borrower who is surprised to find out how much money they really need to bring to closing. And those conversations can be difficult because we don't always know why the lender disclosed what they did when we know that we've quoted fees correctly or provided them up front. But we have a surprising amount of lenders who are choosing not even to disclose the owner's policy at all. And it definitely makes for an interesting conversation at closing, but for the most part, we've been able to navigate it.
That's great, thank you, Laura. At this point, let me just throw out to the audience here, of the items and the topics we've talked about so far this morning in this session, have you found that you're experiencing similar situations in your offices? You're not? It's really quiet, you're not. They don't have the same problems as all y'all are having up here. Okay, all right. I would think so, yes.
Probably the hardest thing that we have to deal with is when, in addition to the simultaneous issue credit, there is a reissue credit that is appropriate to add on that owner's policy or subtract, as the case may be, from the owner's policy. So that when you do the simultaneous issue disclosure as CFPB requires, the owner's premium literally becomes a negative charge on the closing disclosure.
Okay.
Wow, talk about battle with lenders. Well, you can't give that money to the seller. I mean, they just don't get it at all. And I think it would be absolutely fabulous if we could come up with some kind of an industry-wide explanation to give to those lenders that is succinct and understandable from their perspective.
Excellent. Okay. Yeah, thank you for sharing that. Okay. All right, so let's move on. Question I have for Robin. Okay. Who sets the expectations for how the closing disclosure is prepared?
Well, we all know it's not us. You know, it falls to the lender's court. Obviously, it's across the board as whether the lender's preparing it, when they're going to prepare it, how they're going to deliver it, and all those sorts of things. We're just gathering information and going along with that. I think our role in that is to find out what they're doing and comply with that. There are points, and I think it was said yesterday, that we do need to push back to help to steer them to proper timing and this sort of thing, and proper disclosure, things that we know on there that are incorrect and whatnot. But I'm also not that judge and jury, and so it's not my job to be that brick wall. It's my job to be that advocate and to work through that with them as they're going through that process. But until you get to a point of something that you're asking me to do being illegal or going to put me in a compliance spot, I'm going to quote you some regulation. I'm going to try and get you to that point, especially on the reissue credit and the negative figures. Sometimes we're jimmying numbers around on a closing disclosure for them. I'm fine with that because my settlement statement still reflects everything correctly. But getting to that point, there's a part that I don't need to try and tell them how to do their job. We have lenders that have huge amounts of attorneys and compliance departments, and we have lenders that have 2 people that have gotten together to figure out how they're going to do things. And that's the whole gamut I know that we see. I think the best thing for us to be doing is to be educating all our people, especially on that fee quote part of that preparation. Your marketing people, your title people, who here has worked from a rate card? Okay? There's a whole generation of us that have not us, because I still have the typewriter and carbon paper, but there's a whole lot of people who have never seen a rate card or calculated rate. So we have title people, not we specifically, but in the industry, that don't understand how that simultaneous issue credit and that reissue credit work. So it's very difficult for them to communicate that to lenders if they don't understand. So I think a huge key for us in helping them with that preparation, because that seems to be the big factor, is educating not only all of our escrow people, but our title people and our marketing folks that are out there every day. We all sound like we know what we're talking about. We can explain that a little better. Excellent.
Okay. All right. Thank you, Robin. Let's pass the mic there to Anita. And Anita, I've got a question for you. What should you do if a lending client does not use the required TRID forms?
Well, first of all, can you hear me better? First of all, what we're seeing out there is for your residential mortgages or loans out there, of course, I've not seen a big discrepancy of whether or not the lender is, they're using the correct form out there. The discrepancy comes when a lender's questioning whether or not they should be using a CDF form on construction loans. And of course, as was mentioned yesterday, there's a lot of lack of direction from CFPB as to those construction loans, and whether you should be using the CD or whether there should be a HUD created. But back to the question, in the event that the lender was using a HUD form versus we know there should have been a CD form, we're going to again question the lender, get them our regs, try to communicate with them, but in the end, we're going to document our file if the lender's still insisting upon using a HUD versus the CD. Again, the lender is responsible to being compliant when they're making those loans out there, so the end result is they will be the ones that is going to have to respond back to CFPB if they use the wrong form.
Okay, great. Thank you so much. Okay, now we have a question as a group question here. What are some tips when communicating with real estate agents? Group question. We did that one already? We did? Well, it was similar to what should we be talking about with them, but any tips? Any tips there? It's two questions there. Do you have any tips?
I think we all elaborated before, but I think the tip is really to just be, even to the point where you think you're over communicating, at this point we just can't seem to get enough points of contact with our customers and helping to guide them through, because we are all in kind of uncharted waters right now, I think, and we're all learning a little bit as we go and reacting, and so the more we can keep them informed, the better.
Okay, great. Well, thank you very much, Sarah. All right, another group question then. If the settlement agent prepares and delivers the closing disclosure to the consumer, are they subject to the fines and penalties for noncompliance?
I'm going to start and say I'm not of the opinion, but I'm not an attorney and I'm not CFPB, that we are subject to the fines and penalties because the rule clearly puts that responsibility to the lender. What I am responsible for, though, is compliance on things that I do that affect us. Recording fees, we've already seen fines that go down, accuracy of recording fees. But that timing and delivery of a closing disclosure is clearly on the lender's side. If they're asking us to do it, we're documenting files like crazy that we're doing it and we're putting it out, but it's all at their direction. My question is, sometimes it's like, oh yeah, you prepare and deliver that to the closing disclosure and I'm good with that. Well, what method do you want me to use and how do you want me to confirm with you? Oh, I don't care. So, you know, we're just going to document ourselves because at some point in time they're going to get that question and they're going to need to provide that proof, and if I can help them through that process then, that's great. But for the most part, I think lenders are delivering it.
At this point, we've not been asked to deliver the CD directly to the borrower via mail or email. And I can tell you, it's my opinion out here, that in the event the lender is directing us to deliver the CD, I kind of have a different opinion on that, which is, you know, it's good to talk about. But the lender has to provide compliance to their, or give evidence to the CFPB if they were audited out there that they have delivered the CD to the borrower and how the delivery method was. So we're taking the stance that if the lender wants us to deliver the CD via email or snail mail, however that would be, like Robin said, we want some direction from them. Thank God that they haven't asked us to do that, because right now for our email, I don't have a system to track that the borrower has received the CD. And there's a couple steps out there that's required to be taken when the borrower receives the CD via email. They have to confirm that they have a method to receive, to accept and receive that email. So, and as far as snail mail, I guess that we would be either sending it FedEx or we would send it certified. So the issue comes then, of course, is how are we going to document and track that? And I don't think that we want to put ourselves, from my standpoint, in a risk situation where the lender could come back if they're fined by CFPB. They give us direction as how to deliver, and then we haven't delivered up to their standards. So I think there could, and it's uncharted waters at this point in time. So there could be a fine out there, but we're steering away from that specific area. And like I said, we've never been asked to deliver that CD yet via email or mail. But there is one thing that the borrower, that we have been asked. If the borrower, the lender will say, well, we'd like you to prepare the CD. Okay, fine, we approve your CD. But for timing purposes, can the borrower come in and sign in your office? Heavens, yes, they can come in and sign at the office. But we're also taking it a step to provide proof that the borrower came in and signed. So we're having the borrower sign off that so-and-so came in and signed the documentation, even though that CD may be dated that date, that he appeared before me and he signed the CD. And we've even considered taking it a step further, where obtaining a copy of his driver's license if we're in question on that. It's just good backup.
Great. Okay, thank you very much, Anita. Okay, question for Laura. And this will be concluding our last individual questions that I've got for the panel. So I'd like for the group also to be thinking about maybe some questions that you all might have for the group up here too. So we'll go to that here in a little bit. Okay, Laura, how do we provide proof of delivery of the closing disclosure? And have you been asked to do this?
I think we actually just touched on this kind of through the compliance, but so I guess I'll tack on a little bit to what they said. At this point, we have not been asked to do any delivery of the closing disclosure, but in agreement with what they both said, we really are just taking the stance of we're going to ask the lender what their preference is to consider what proof is, but we are able to document, you know, whether it's an email or we're mailing out or whether we have some sort of an affidavit signed that they came into the office. We're ready to do that. What we found is that for the most part, though, our lender customers, they're preparing the CD and they're delivering. We really only have one regular occurrence where we're preparing the CD, and the rest of our lenders are preparing and delivering.
Great, thank you very much. Okay, all right, now that concludes the group of questions that we have for the panel. But what I'd really like to do, and I feel it's really most important, is that all of you in the audience attending today, you might have some questions too. So we've got 3 experts up here who volunteered their time. Yes, sir, Rick, got a question? Please.
So early on, we saw a shift in the instructions that were coming in from the lenders, wherein there were some pretty aggressive efforts to shift all of the liability over to us as settlement agents. So just wondering if you guys can share some experiences in terms of what has been an acceptable response back to the lenders in terms of not accepting all of that liability and maybe pushing it back. How do you work with that? And, you know, have there been some easier ways to get the lenders to accept modified instructions?
Okay, and thank you, Rick. That's a great question. So the question is, shift in lender liability is trying to be made by the lenders to the closing agents. How are we responding to that?
Okay, starting off with, I think in the beginning, when we first started seeing these instructions coming out, of course, we have asked that our escrow staff in our offices, if you were reading those instructions and you recognized that there was a lot of liability being shifted to the escrow agent or to the title company, we have asked that those instructions be sent to the compliance team, which that we're pushing up to our legal counsel to look and revise. Oftentimes, the instructions can't be changed overnight. So there's a lot of back and forth with the compliance team on the lending side as well. We've been successful in rewording some of the documents, the lender's instructions, but it's a fine line and it took some time to get those documents reworded. Now, in the beginning, we had all of the escrow staff send all of the instructions to us and we would try to read through those. And then we kind of had a lull period there where we felt like that we probably had everything covered with the lenders. But again, yesterday when Mary was talking about things that were changing, the regs were changing at that point, then we made the decision again, it's probably a good time to start reviewing those lender instructions. I know that we've asked escrow to go ahead and line through those instructions if we couldn't get them changed at the time of closing. Well, we've had pushback from the lenders saying, you go ahead, you can line through those instructions all you want, but we're not accepting them and we're not going to close. So then you make that decision at that point in time. Are we okay to move forward? It's always a push that information up to your legal counsel. Make sure that they still feel that we can move forward and keep ourselves out of trouble and close the transaction. It's a challenge out there.
Those instructions are very fluid, and as said yesterday, and she just said that they're changing on a regular basis. That makes it all the more important that we are consistently and always on every single transaction reading our escrow instructions. Bank of America sends 27 pages of master instructions. Do we read them all every single time before we close? I do now. Okay, we didn't used to, but we need to do that because of those changes. As Anita said, we've done some pushback. We've been successful in getting some instructions for some specific lenders changed, but we have to be on the alert for that at every level. We have given instruction to our officers when they come across those first, again, we're getting a second opinion on it, making sure that we're covering our bases. We are willing to line through those instructions and proceed with that as long as the lender has approved our modification to that. And in some cases, that has taken those higher level management folks, talking to the higher level management folks at that lender's office to say, hey, while we're working through this process, we're not willing to take this right now, but if you want this deal closed, this is what we're going to need to do. If we can't come to some compromise, we are willing to take the stance that says we are not going to close that transaction.
One other piece to that I would add, and I'm not sure if you guys are experiencing this, but we also typically are not getting any lender instructions until we're pretty much walking into a closing room, which makes this even more difficult because by the time we're finding out that they have this language in it, we may have even already had to sign the buyers and then turning around to call them prior to funding. I would say that our process is probably a little less formal, but basically the same steps where we are having kind of key people evaluate the wording of those and then really just trying to get on the phone with that compliance person to get them to approve the changes that we need made.
Great, and thank you all for attempting to answer that and your good responses there. How about other questions from the group? Anything you'd like to ask them so we can have some discussion points here? Any other thoughts? Okay, going once. Oh, there's one in the back of the room. Yes.
How, and this may not be something you can answer, but how are these lenders getting away with completely avoiding the 3-day rule? I mean, we're talking, they want us to prepare an initial CD at 4:45, and the closing is scheduled for 6:30, and the closing happens.
And 3 to 4 years from now, when CFPB catches up with that and the multi-million-dollar fines are handed down, those things will change. I mean, it's, you know, we're in that early regulatory period. We don't have any feedback. That's clearly an issue that is pretty well laid out, but we don't have that feedback. We can go back, we can quote those regulations, we can do that. All I want to say is don't participate, okay? To me, signing that CD and dating that CD with the borrower is just like putting my notary stamp on something. It's happening the day it happens. And I won't take any push from a lender to change the date on that, okay? Because that crosses into that illegal things that we shouldn't be doing and cross that line. But as far as the ramifications on it, if that's how they're willing to close and do it, that's their end, and they may continue to do that for a period of time until they get nailed with that. Or until the first person goes to www.cfpb.org, file a complaint here, I have your number. Yeah.
I kind of think that some of the first complaints are going to come from other lenders. And see, that's what's happening. We're getting phone calls from other lenders going, how is lender XYZ closing the same day they're issuing the CD? Because they're losing deals. Because realtors are pushing these deals through other lenders who will not wait that 3-day period.
But be careful answering that question to that lender, putting yourself in the middle of that mudslinging. It'll look like a presidential debate.
Do you have to be so honest all the time and tell the truth? You know, just remember, you may get what you want, but you may not want what you get, you know, down the road. Okay, other comments on that question about the avoiding the 3-day rule? Pretty well covered. Yeah, it's pretty simple, pretty straightforward. There's no free lunch, is there? You know, there will be a day. Okay, other questions in the group? Yes?
Do you have any suggestions for short sales? We just have one where they approved the short sale based on closing statements for buyer and seller. But then after we closed, sent the wire, and the day after, they insisted to the listing agent that they upload a signed CD from both sides. So we ended up doing it by getting permission from the buyer and the lender. But are you seeing that a lot?
Okay, so the question is timing of closing on short sales. What are you seeing out there?
So we've seen several issues with short sales. For us, it's actually usually the opposite, that they will not let us use a CD. They want to use a HUD, but the borrower's lender, of course, is required to use a CD. And so we spend a lot of time trying to find someone within the short sale ladder of people to talk to. We've tried doing combined closing statements. We've tried getting approval authorization like you did and sending both sides of the CD. But for us, the bigger issue is that the short sale lenders still want a HUD on a CD transaction, and we can't do both.
Even short sales that are originated by Fannie Mae and Freddie Mac, that are federal, that are CFPB related and all that, yeah, they want that. And the way our system is set up, we can't generate both out of the same file. We literally have to create a separate file, manually create that HUD for them. And as far as the CD goes, you're right, that is technically the only way that you're going to be able to provide that is get that permission from that borrower to provide that document to them. And they're insistent that they want both sides because they won't take a settlement statement. I think over time we will see that concept change, just like they let go of the HUD settlement statement a little bit. As soon as they start to realize that they can't always have that closing disclosure. I mean, even on the secondary market, lenders are upset when the lender has sent, the investing lender has sent them that permission letter for, you know, this closing disclosure to be released to other people, and they have it there in their file, because technically 2 years from now, that means the realtor can call and get a copy of that. Okay, and so as those things get a little more solid, I think we'll see that go away. But right now it is an issue, and what you did was exactly the right thing, is get those signatures on both sides. We still always send a settlement statement. We're trying to get them geared towards that process.
What we're seeing out there in addition to that is we just had an issue like that where the short sale transaction, the actual lender for the short sale, meaning the short sale lender that we were paying off, did require a CD versus the settlement statement. So it seems to be all over the board. And so with that point in time, of course, we always push back, try to provide the settlement statement. But then we've also, our system is the same way. We have to go in and create an A file to accommodate creating a CD for that short sale lender, or on a HUD transaction, or possibly a Fannie Mae or Freddie Mac transaction. So again, we're trying to accommodate those lenders out there, find a way to give them the information that they want, but the difficult side of that is where they want a combined settlement statement or a combined CD. And at that point, we're not able to provide that without written authorization from all parties.
Great, thank you very much. Any other questions? Oh, back of the room again, yes. No, don't be sorry, that's important.
So it doesn't matter how far in advance we get a settlement statement out to the realtors. These realtors are still showing up at the closing table and asking us to add bills to the closing. Oh, I have this septic bill that they just gave me, which sometimes it's not their fault because they literally just came from having a septic pump in the house and have the bill that they want me to do closing. The lender is saying no changes to the CD at this point, which puts me in a bad position as a closer because I now know that there's something that's going to happen outside the closing that the lender is not allowing to be on the CD, but I know it's not a bad thing. Does that make sense? How do we address that? How do we, and yes, we're telling the realtor, sorry, too late. You can't add that. And they're sitting there talking about in front of us how they're going to just cut checks outside of closing. We get back into the corner on that.
Okay, so then the question is, how do we address a timing issue for those last minute changes that aren't disclosed until the closing table? How do you handle it? Okay. Okay, all right. Let's go for that one.
Well, I think there's a couple different avenues there. I agree with you in the sense that trying to educate your agents, like we talked about, some of the things to be communicating with them early and really trying to get those things from them early on and know the consequences involved. But when it happens, I mean, at that point you do have the option to, if you at least brought it up to the lender and said this was just brought to our attention, and they tell you we're not putting it on there, you've done your part, you've disclosed it to the lender. I mean, it's no longer, I mean, they have knowledge of it at least, so it's no longer just on you that you're not disclosing something to the lender that's come up.
And then I would put it on my settlement statement because my job is to clear title, protect the company, and yada, yada, yada. And I would put it on that settlement statement, and that's how I would close that transaction, and I would make sure that that lender got a copy of that settlement statement. If I know that that sort of thing is not affecting an APR, I'm not putting the lender in a position to have to be redisclosing. And their feet dug in, I'm not changing the CD, is their issue and not mine. So
you're saying that I can put that on my settlement statement and I can actually pay it through closing?
I'm saying that I don't think that you have much of a choice but to put it on your settlement statement and pay through closing, especially if it's a bill that's not paid, it's going to be a lienable item and affect your policy issues. If you're putting that on that statement and you're charging that to the seller's side, that there is no way that that's affecting the APR on the buyer's side. You're not changing any of the other terms that require a redisclosure under the closing disclosure. So I'm not putting the lender at jeopardy with that. I'm going to send them a copy of my final settlement statements anyway. How many closing disclosures do I get that we sign at closing are actual real anyway? I get some sometimes that don't have any of my title clearance stuff on them. They've got fees on it, but there's not a tax proration anywhere to be found. And I don't have a problem putting those on there, right? So that's just my opinion.
Robin, you said it's on the seller's side, the lender's not going to have to redisclose anyway, correct? I mean, we let them know about the bill on the seller's side.
Correct, and I'm going to send them a final seller settlement or CD with that on there because I'm creating that CD with my settlement statement. I'm just saying if you've advised the lender and they're refusing to put it on there, if I know it's not affecting APR, I'm not putting the lender in a position of forced redisclosure, okay, so they don't need to do the new 3 days. But I still have an obligation to remember where my stop point is. My stop point is if you're asking me to do something that I shouldn't be doing, or that's putting us at risk from a title insurance perspective, and that's exactly what that is. So I'm going to put it on there.
Well, another avenue that you might consider as well is if you're not going to show that on your settlement statement, because our system, if we input in fees into our processing system, they not only flow onto the closing disclosure, but of course those exact figures pull onto our settlement statement. And then when you're looking at your settlement statement, if I was a lender, possibly down the road, they may be matching up your bottom line, regardless of whether it's the buyer or the seller. Just depending, I guess time will tell how that all plays out. But another avenue that you might consider taking is adding that information onto your escrow instructions, stating that the invoice, you've been instructed to pay the invoice outside of the actual disbursement. And maybe that's another way or avenue that you could handle that, is then go ahead and remit those fees outside of that actual settlement statement.
Great, thank you, Anita. All right, these are wonderful questions, and I hope that you've all found this time with the panel to be of value to each one of you. What I'd like to do at this time is to extend a thank you. Please help me thank the panelists here, Laura, Robin, who've done some great preparation, and the willingness to come up and share their comments and experiences with us is invaluable. Also, I'd like to extend the thank you to TitleOne, Title Financial, and Alliance Title for giving them permission to come up here and share their experiences. Thank you very much.